Well, soon the White House to brief the president and the press, rather, and we know that the Russian firestorm will continue. Trump critics continue to freak out. In the meantime, those stocks, well, they continue to shrug it all off, and maybe they're worried about something else, but it certainly doesn't appear to be trade. Although a new survey showing 60% of investors believe a possible trade war is the greatest risk to the markets. Stocks, though, again, have not really moved that much. Some are saying they're sideways. I count the Dow up almost 1,500 points since these disputes really began. So will it actually catch up to the market? To the Gartman letter editor and publisher Dennis Gartman, Center for Freedom and Prosperity Chairman Dan Mitchell, and Independent Women's Forum Senior Fellow Patrice Lee Onwuka. I'll start with you, Dennis, and I do want to point out, coming into the week, of all the things that were mentioned in conference calls as being negative to earnings, of all the companies that talked last week, only one mentioned tariffs. That was Lennard talking about the Canadian lumber tariffs. Everyone else, there were 7 other things that were more important, from currency to raw materials to transportation to oil to wages to weather. Even Europe was more important to the actual facts. So tell us what's going to happen here.
Well, it is amazing to me, Charles, that nobody seems to be paying much attention to the trade concerns. They should be. But at this point, it's still a bull market, isn't it? And I must admit, it surprises me. It almost means the market takes almost all news and takes it very well. If it's earnings, whether they're higher or lower, the market wants to go higher. Whether it's political circumstances that prevail in Europe or in Moscow, the market seems to want to go higher. The market has spent 6 months now going sideways and has been in a very tight trading range, and it seems to be breaking out on the upside. I, for one, thought that the trade talk and the trade tariffs and trade protection would be detrimental to stocks. It doesn't appear that that's the way it wants to be.
Of course, Patrice, we started today with the NASDAQ at an all-time high. Russell's not too far behind, and now the Dow's creeping in the shadows of its former high. What do you make of that? I mean, we know the things that could happen, right? We understand history and what could happen, but by the same token, we're talking about corporate America. These are CEOs who, right now, on a record pace in terms of guidance, they're saying things so far have not had an impact, and they don't see it having an impact in the near term.
Well, for one thing, we haven't seen the tariffs actually take a full effect. I mean, it's going to take some time to see real prices on goods, both inputs as well as outputs, start to really hit their bottom line. So that could be part of it. But I do think, though, that companies are thinking about, intellectual theft by China and some of these other issues that I think the United States is trying to negotiate right now as being something that should be on the radar, because that does hurt businesses in the long term.
It does hurt businesses in the long term, Dan. Also, there's the good news, right? We're in the midst now of an amazing earnings period. So far, they're not going to cover off the ball. The first quarter earnings were through the roof. We can't keep it going forever, but it certainly speaks to an economy that's on fire.
I don't know if I would say on fire, but there are some good things. Good tax reform, good regulatory policy, or at least less worse regulatory policy. But I still think that the trade stuff is a very worrisome sign. Think about it this way, Charles. If you have one cigarette a day, maybe your chances of getting cancer aren't that high. But all of a sudden you go to 5 cigarettes a day, and then a pack a day, then 2 packs a day, and that's how trade wars start. A little tit for tat here, then more, and all of a sudden, then you have 1930s-style economic damage because of the bad policy. So we're only affecting a little bit of trade now. Less than 10% is being hit by these tariffs. But watch out if somebody doesn't grow up and say we need to stop this
Dan,
process.
I did the math. So if you do 25% on the first 50 billion, and then 10%, we're talking an additional tax, if you will, of almost $33 billion on $560 billion in goods and services we import from China. Is that enough to derail, and I got to disagree. I mean, we're talking about a second quarter that might have been 5% according to Barclays. We're talking about all-time low unemployment rates. We're talking about wages edging up. I can't think of a more Goldilocks economic scenario.
Charles, if it stopped right here, I would agree with you. That's not going to cause a recession. It's not going to kill a recovery. I'd be more worried about things like bubbles because of the Fed and easy money. But I'm worried about where this process ends. As other countries retaliate and then Trump gets his back up and says, well, we're going to hit them back. It's like a couple of kids in a sandbox fighting, except we're the ones who are going to get sand in our eyes.
Patrice?
Well, just to jump in here, I mean, so far China is the only country that's really taken, any sort of bluff and been standing up to it. I think, I think we're going to see some sort of deal happen with China. But to another point, if tax reform 2.0 delivers another point lower in corporate tax rates, that's going to be even better for the stock market and for corporations.
All right, real quick, Dennis. You're taking some heat today because you got bullish. You're saying an exaggerated, stunning rally on the way. What's this all about? How come everyone's upset now?
Well, people should be upset. I think Dan is absolutely right. I am concerned about the fact that this is a very slippery slope and that we might be sliding down that slope far too quickly. We have to be very careful. But nonetheless, I'm a trader. I look at how the market has responded, and it's taken bad news and taken it very well. It has surprised me, no question about that. I think Dan is absolutely correct. But the fact is, the market still wants to go higher. I have no choice but to say it looks like still it is a bull market, and one has to still err upon the side of being bullish. But one has to be very, very careful.
I understand. Hey, thank you all very much.